Hi everyone, good morning. This is Yongka here, the US Equities Analyst. So today I'll just be bringing you through on Priceline Group, which is a 55 market cap company, a 55B market cap company that does online traveling. Okay, so this is a market leader of a $500 billion online travel markets, which in the past 4 years have recognized a 46% CAGR. Just a quick brief snapshots. The share price today is $1,008, which is actually on the 52-week low. The long-term market cap is $53 billion and historical PE is 22.4 times. What's the big deal about this company? Okay, this is the number one market leader in online travel. What it does is it earns a percentage cut whenever travel reservations is performed on its websites. So these reservations can be in the form of an airline, hotel, or car rental. Mostly it facilitates transactions with third parties, which is in the form of an agency revenue. And this form of revenue, which you can see below in red, this has 100% gross margins, okay? So in essence, more than 70% of its revenue has 100% gross margins. But okay, so some investment merits on this company. Valuable online brands. The websites they own is Booking.com, international exposure, Agoda, which is Asia focused, as well as Priceline, predominantly in US. Revenue and gross bookings up 26% and 32% year over year for the 9 months of financial year 2014, and the net margins is 33%. Okay, it's riding on a multi-year circular trend. There's an ongoing migration from traditional travel agencies to online. At the same time, this will be a key beneficiary of low oil prices, as it should translate eventually to cheaper air tickets, and also higher discretionary income because of lower input costs from your logistics and energy. On network effect, it attracts more repeat users. So the thing is that the more listings, the more hotel listings you have, the more users and consumers that comes to this website, and this in turn attracts even more hotels to list their room inventory there. Okay, this network effect actually enables it to outspend competitors. So in financial year 2013, it spent $1.8 billion on online advertising expense, which is 50% more than number 2 Expedia. Even then, it is overcapitalized. There's net cash position of 5B right now. So this actually gives it flexibility to lever up and repurchase 20% outstanding shares, which if it does, it will boost its our target price by about 20%. Right now, it's attractive at 22.4 times historical PE on the basis of about 15% per annum EPS future growth for the next few years. So all in, we have a target price of $1,435, which represents 42% potential return today, and we initiate coverage with a buy call. Okay, now the key thesis of this is whether this Priceline Group is capable of sustaining a double-digit percentage growth year over year, as seen in these charts, where the net profit is up 350% from 5 years ago. Number one, according to Expedia, online travel is today 45% of total travel market and expanding. Why? Because this is an ongoing migration from traditional travel agencies to online. For example, in Singapore, Natas Fair, September 2014, actually saw 10% less visitors and even a bigger fall in sales. At the same time, Priceline is gaining traction in its mobile channel. $8 billion of bookings in 2013 alone, which is up 8 times from just 2 years ago when it did $1 billion. Secondly, IATA, International Airlines Travel Association, expects 31% increase in passenger numbers between 2012 and 2017. So by then, they should reach about 3.9 billion passengers. This forecast was actually released when WTI crude oil traded at $100 per barrel. Today is $45 to $50. So lower surcharges should improve the affordability of air tickets and also increase discretionary income because of lower input costs and gasoline savings. Third, hotel industry is very fragmented. Top 10 worldwide hotel group actually owns only 4.6 million hotel rooms, and so this is about 1/3 of the global room inventory. So there exists a need for online travel agencies such as Priceline to come in to aggregate listings and reach out to the consumers. There is this network effect in place. So again, as what we previously mentioned, more listings attracts more users, which in turn encourages more listings. This powerful feedback loop reinforces market leadership and allows it to outspend its competitor. As you can see from the charts, the gross bookings have mostly increased due to your room nights. Okay, 267.8 million room nights were booked in 9 months financial year 2014. In terms of the total bookings, it almost exceeded the full year of 2013, just for the 9 months of this year, and this is up 29% year over year. Mostly it's international growth, as 85% of their bookings comes from international markets, and only 15% is from US. Even so, Priceline has barely captured 10% of online travel market, which is estimated to be $500 billion in 2014 and growing. Online advertising is the biggest component of operating expenses at 54% of the overall expense. Okay, $1 of online advertising spends drove $1.06 of net profit in 2013, whereas the same metric means that Expedia only earned 18 cents per dollar spent. So this translates to 4.9 times better profitability and enables Priceline Group to reinvest and outspend. Lastly, Airbnb is disruptive, as you are all mostly aware, but it's more of a threat to the traditional hospitality industry than Priceline, the booking platform itself. Airbnb, I would view it more similarly to Hotels.com or HomeAway, which it does vacation rentals, in the sense that all these websites offer accommodation alternatives to travelers. HomeAway.com is established in 2005 and has over 1 million listings today. It focuses on short-term vacation rentals, much longer operating track record than Airbnb, but still today it only commands a 2.6 billion market cap. So it's yet to be seen that Airbnb is not really a newcomer in terms of alternative accommodation. Also, Airbnb listings are individual properties, so once booked, they become unavailable, whereas for an hotel, let's say a 100-room hotel, it can simultaneously cater to 100 bookings. So Priceline, the business model, is actually more scalable than Airbnb. In terms of valuation, so today it's trading at 1 standard deviation below mean. Okay, it's almost at all-time 5-year low. If we look at it at a more sustainable 15% EPS growth rate compared to the past 4 years of CAGR, and we think that Priceline could deserve a forward PE of 27.7 times, which is a multiple half standard deviation below mean. So you use that EPS and for PE, you could be looking at a target price of $1,435. So again, these are the investment rates that we mentioned just now. Alright, revenue gross bookings are up nicely 26 and 32% year over year. Multi-year circular trends, low oil price, this Priceline will be a good beneficiary. Network effect is net cash position, so it can actually repurchase outstanding shares and boost the target price to about $1,600. Today is attractive at 22.4 times historical PE on the basis of about 15% annual growth average EPS for the future. So again, target price of $1,435, 42% potential return today, and we initiate coverage with a buy call. Okay, so that's all we have for this company today. We're open for questions now. Thank you. Hi, we have the first question of the day. Okay, this reader asks, is 22 times PE expensive? Okay, it's expensive. We are looking at a low growth company, but in this case, this company has actually achieved a 46% CAGR for the last 4 years. And going forward, conservatively, we expect 15% per annum on average. So we think that 22.4 historical PE is actually not too demanding. In fact, you look at 1 year forward, it's actually trading at about 19.5 times. Thank you. We have another question. Given the unclear oil price trend, how does this affect the revenue of this company for 2015 outlook? Okay, all things equal, if the oil price stays low, then this eventually should translate to cheaper air tickets and also higher discretionary income. But that being said, oil price is also not just, I mean, we cannot hold all things equal. For example, you might be aware that Schlumberger, they laid off about 9,000 workers just a few days ago. So we have to, I mean, going forward, the economy outlook will still be slightly murky. Just to reiterate, this is a multi-year circular trend. So we are looking at an continued migration from traditional travel agents to online. Okay. Okay. What is the reason for the recent price weakness? Okay, one of the reasons that we see is because they actually guided to about 13 to 20% year-over-year growth for the gross bookings for fourth quarter. Okay, so a big part of it is because US dollar has strengthened, so this will make the reporting currency look weaker. We have another question. Who do you consider as finance competitors? How are they doing in terms of valuation versus Priceline? Okay, so we mentioned Expedia. This is number 2. Expedia is actually, I won't even say anywhere close. They spend, okay, in terms of online marketing spend, they spend 1.2 B on online advertising versus Priceline, which spend 1.8 B. Okay, so Priceline actually outdid Expedia in terms of 50% online advertising. At the same time, in terms of revenue and gross booking, Priceline and Expedia are actually experiencing almost similar growth rates of 20 to 30%. Expedia is also trading at 26 times historical PE today versus Priceline of 22 times. Expedia, the thing is that because it's starting off at a very low base, so the earnings actually have a slightly more potential to grow. But the thing is that it's not as competitive because it doesn't have as much spending power. We have a question on Thai Bev. How is outlook will be affected by the oil price volatility? So Thai Bev, currently we don't have any coverage, but our understanding is that it will be affected by.
Hi, this was Chris Sanda, the new head of research. So the key issue with Thai Bev and its impact as far as right now what's happening to it is mostly has to do with the euro. And the euro volatility is causing it to weaken, which then is having an impact upon all local currencies that are not pegged to the US dollar. So you're going to see the baht and among other currencies start to weaken. So the translational effect of beer, which really doesn't move that much on a volume basis, earn less as it gets translated back into Singapore dollars. So there'll be a negative effect on that.
Hi, we have a question. To what extent is the weakness of euro affecting Priceline, percentage of revenue from euro? And also, what are the business lines that is going to give Priceline the biggest growth? Okay, so for the first part, obviously with the weaker euro, this will actually discourage traveling. But at the end of the day, this is a volume game. As you can see that the fourth quarter guidance is still very strong with a 13 to 20% underlying gross bookings. They currently don't have a breakdown of the revenue from euro. although we know that they are quite strong in Italy and UK. So second part, which business line is going to give Priceline the biggest growth in 2015? So just refer you to the previous. Room nights, hotel room nights is where the money is. Okay, on average, they are getting about 13 cents for every dollar of hotel booking value. So so we can see that actually from 2010, it's actually grown from about it's actually grown very substantially, about 4 times. Another question. A lot of .com agents out there offering similar services. Who are the closest competitors to Priceline? Expedia is a number 2. So just to give some background again. Priceline.com, 85% of the bookings is derived internationally, whereas for Expedia, only 41% of it. So Booking.com, Priceline, this is actually the number 1 market leaders in the international market, whereas Expedia is only number 2 from Hotels.com, Trivago example. Okay, this is a very interesting question. How Priceline is compared to Ctrip, since going forward, the largest traveler markets will be China. Priceline actually acquired a $500 million stake in Ctrip just very recently. Okay, but it's an equity stake and it doesn't have any controlling say, which is why we didn't really mention it. But of course, this is a free option and it's publicly traded shares. So we just have to observe and see how the China market perform going forwards. Hi, there's a question. Have I personally used Priceline services? How do I rate it and how do I compare with competitors? Okay, so of course, Priceline, as we mentioned, this is the number 1 internationally. Okay, Booking.com, Agoda.com, and use it very regularly. Of course, in US, it's second fiddle to Expedia, but US growth is slightly more mature because online penetration has been way upped, and this trend has played out for years already. So in all, I would say that in terms of Booking.com and Agoda.com for the international travel, I really see it's highly rated. It's very friendly user interface, and the pricing is very transparent. And of course, we're looking at huge growing volumes year over year, of 46% CAGR for the last 4 years. Another question, is Alibaba competing with Priceline? Well, maybe in the future. Okay, so we actually have Amazon and Google. They announced last year that they'll be entering the online travel market. Okay, so what's the catch? Google, they actually bought this ITA, this travel software, for $700 million in 2010, and nothing much has come out of it. For Amazon, yes, it's pretty big, but it's being in US. And US only 15% of the US only contributed 15% of the gross bookings to Priceline. So Amazon, if it does big, most likely it will scale up in US first, and this will have quite a minimal impact on Priceline since the exposure is only 15%. Hi, that's all we have for you today. Thanks for tuning in for today's Monday webinar. We hope to see you next week. Thank you.